Why, hello there, Hector Deville here once again. In this particular video, by the way, this is going to be a short one, I want to introduce, a particular trading concept that I actually apply on most of my trading systems. And that's, basically following a multi-time frame approach. Alright, in one hand, we'll have what I call the setup chart, and in the other hand, we'll have what I call the trigger chart. Okay? Let's start off with the setup chart. The setup chart is a time frame where we spot the trading opportunity. Since we are talking about the 3 SMA system, the setup chart would be the time frame the trend belongs to. Okay, the trend where the moving averages are, parallel to each other, pointing in the same direction, etc., etc. All right, that's going to be our main time frame of reference. That's the time frame where we want to seize the trading opportunity, the time frame we want to follow the charts on. All right, it's going to be our bread and butter time frame. As we monitor price action, searching for our trading opportunity. All right. Now, in the other hand, we have what I call the trigger chart, all right, which is basically a shorter time frame that we are going to be zooming into once it comes to actually enter the market. Okay, once it comes to click on the buy or the sell button, that's when we are going to be zooming into the trigger chart. Okay, just at that moment. We are going to be using the setup chart 90% of the time, because that's where we are going to be following price action. That's where we are going to be analyzing our charts. And we are only going to be zooming into the trigger chart again at the very last moment, in order to, since it's a shorter time frame, since price action moves a little bit more, a little bit faster on the trigger chart, we are just going to be using it at the last moment in order to pinpoint, in order to, nail down, to narrow down our entry level as tightly as possible. Just to try to enter the market, maybe let's say 5-10 pips earlier, or as soon as possible. That's the only use we are going to have for the trigger chart. Again, your main time frame of reference is still going to be the setup chart. You are only meant to use the trigger chart at the very last moment to jump into the trade. Okay? Now, one of the most common mistakes new traders make is to actually zoom in too much. Okay, they tend to zoom in too much into their charts, and that's actually a mistake, because you may lose perspective of what your main time frame of reference actually look like. Please remember that your main time frame of reference is always the setup chart. So you don't really want to zoom into that much when it comes to click. To pull the trigger. Basically, if you spot the trend on the monthly time frame, you want to zoom in just one time frame, let's say the weekly time frame. Okay, so if the 3 simple moving averages are in order, parallel to each other, etc., etc., on the monthly time frame, when it comes to, let's imagine this is the 30, this is the 50, and this is the 100, price is swinging to the downside. When price retraces back to the dynamic area of support and resistance, you want to be zooming into the weekly time frame in order to nail down the bounce point, in order to read the bounce as accurately as possible. So instead of entering there, you hopefully will be able to manage to enter the trade just a little bit earlier. That's the only use we are going to have of the trigger chart. All right, so monthly time frame, you will zoom into the weekly time frame when it comes to pull the trigger. If the trend is recognizable on the weekly time frame, then you will zoom into the daily 4 hours, hourly 1 hour, 15 minutes, 30 minutes, 5 minutes, 15 minutes, 5 minutes 2, right, and then 5 minutes, 1 minute. Now, I personally don't search for trading opportunities, meaning that I personally don't use or don't take any trade where the setup chart is any lower than the 30 minutes time frame. Right? I basically don't search for trends on the 15 minutes time frame and or on the 5 minutes time frame. I mean, that's almost like trading as a scalper, all right? And I don't really like scalping too much because price action in these very short-term charts is rather chaotic, okay? As I always say, there is way too much intraday random market noise on the 15 minutes time frame, on the 5 minutes time frame. So my advice is to search for trading opportunities, from the 30 minutes upward, all right? Okay, now you guys have seen my charting platform on a previous video. If you remember, on the euro against the American dollar, for example, on the daily time frame, we were clearly seeing a nice downtrend. Okay, let me actually expand that out. Let me expand that out for a clearer picture. All right, there we are, and now I'm going to be zooming in a little bit more. All right, I think that's rather appropriate. So, euro against the American dollar, daily time frame. The moving averages are really nice, nicely pointing in the same direction, nicely parallel to each other. Price spending most of the time at the right side of the 50 simple moving average. Obviously, nowhere near the 100, no crossover, etc., etc. So, in this specific case, if I was to trade the euro against the American dollar, my setup chart would obviously be the daily time frame. Okay. This is the correct time frame for this trend. Now, that means that the daily time frame is going to be my setup chart and therefore my bread and butter. Okay, this is going to be the time frame where I'm going to be following price action for 90% of the time. However, please mind how price right now is really far away from the area I want to take my trades off. Okay, basically the dynamic area of support and resistance. As you will see on future videos, I'm going to be taking trades right off, bounces off that area. All right. Obviously, right now price is too far away, so I'm not going to be taking trades at this moment. However, I am indeed going to be following price action on this currency pair. Basically, what I will be doing here is I'm simply going to be waiting for price to retrace back up to the moving averages. Hopefully, sooner or later, obviously, the moving averages will catch up with price. And once price is up here, once price is up there, that's where I will zoom into the trigger chart. Since this is the daily time frame, all right, that's my setup chart. I just need to zoom into the 4 hours time frame when it comes to click on the buy or the sell button. Okay, that's going to be my trigger chart, and therefore I am not going to be zooming into the hourly. I am not going to be zooming into the 30 minutes time frame. None of that. Remember what I said before. You don't want to zoom in too much, because the more you zoom, or rather the farther you zoom in, the more let's say the more you get detached, so to speak, from your main time frame of reference. Sorry, I lack the exact word here. as you can probably imagine, my communication skills are not as sharp in English as in my in my native language. But at any rate, what I'm trying to say here is that you don't really want to detach yourself too far from your from your main time frame, okay, from your time frame of reference, which again is the daily time frame. So you're gonna have to wait for price to retrace back to the dynamic area of support and resistance, and once price is there, that's where you will zoom into the 4 hours time frame. Now, please mind that by the time price retraces up to the moving averages, to the dynamic area of support and resistance, okay, somewhere in there, if I zoom into the 4 hours time frame at that moment, that means that price will probably be touching the 100 simple moving average. On the trigger chart, the 30 will be probably curling up. Maybe we may have gotten a crossover. It doesn't matter. All right, it doesn't matter. The 3 SMAs are not significant on the trigger chart. Remember that the 3 SMAs are only there to pinpoint the trend, okay, to mark the trending price action. And since we are to spot the trend on the setup chart, that means that the 3 SMAs are only significant on the setup chart. Okay, so no matter what the setup chart, what the 3 SMAs look like on the trigger chart, that's totally irrelevant. You can even take them out of your chart, of your trigger chart, that is, if you want. All right. So To wrap it up real quickly, the setup chart is where you spot the trend and, more importantly, where you spot the dynamic area of support and resistance, meaning the area you want to sell from, by projecting the dynamic area onto the future. All right, only once price gets up there is where you actually are interested or would consider zooming into the trigger chart, not before. All right. Okay, folks, that's all for this video. Again, I've implemented this multi-time frame approach in most of my trading techniques, in most of my trading systems, and it usually helps me entering the trade a little bit earlier and therefore fishing out few extra pips out of every single position. Okay? Alright, folks, I'll be waiting for you at the next video. Cheers.